Good morning, ladies and gentlemen. My name is Alex, Senior Account Executive at GDMFX with your morning European session outlook, and we'll start with the North American markets where we had personal consumption expenditures price index month on month and year on year both come out 0.1% less than previous, and we also had the core data as well, month on month, year on year. Month on month 0.1 worse than expected, year on year same as previous. Personal income month on month 0.1% worse than expected. Personal spending 0.1% worse than expected. And the Chicago Purchasing Managers Index 7.2 points better than expected. That's the highest level since January and came after big gains in production and new orders. In Canada, we had gross domestic product month on month came out as expected at 0.1%. The dollar rose for a second straight month in October, indicating the currency's rally has resumed after 7 long months of sideways trading. The dollar hasn't risen for 2 consecutive months since March, when the ICE US dollar index, a measure of the dollar strength against the basket of 6 rivals, rose to its highest level in 13 years, above 100. The US and South Korea approved a joint plan to deal with North Korean missiles carrying nuclear and biochemical warheads after Kim Jong-un's regime ratcheted up threats of attack. The Dow and the Nasdaq were both slightly down on Friday. The Dixie is down to 96.73 from 97.20, and the biggest mover in currency pairs was the USD Canadian dollar, 90 pips down. Today's news is Tier 2, Market Manufacturing PMI, ISM Manufacturing PMI, ISM Prices Paid, Construction Spending month on month, and from Canada, RBC Manufacturing PMI. Most important news from the North American markets will be on Friday, when we expect the non-farm payrolls data to come out. And from Canada, we also have the unemployment rate in the same day. All right, onto the EU markets now, where we had CPI data. EU CPI year on year came out as expected at 0%. EU core CPI year on year 0.1% better than expected at 1%. EU unemployment rate 0.2% better than expected at 10.8%. German retail sales year on year 0.8% worse than expected at 3.4%, and month on month 0.4 worse than expected at 0%. Swiss COF leading indicator 0.2 points worse than expected at 98. Spanish GDP estimated for the year on year was as expected at 3.4%, and Italian inflation and unemployment all came out positive. Today's most important news from Europe will be the year-on-year retail sales data from Switzerland. All right, on to the UK markets. On Friday, we saw the Gfk Consumer Confidence for October come out 2 points worse than expected. The FTSE 100 closed lower by 0.5% at 6,361.09. Losses for the mining sector contributed to a weekly loss of 1.3% for the benchmark, but it scored an October gain of 4.9%, marking its best monthly gain since July 2013. Today, the UK is to produce a report on manufacturing activity. Asian and Pacific markets, the latest signs that China will struggle to turn its economy around in the fourth quarter took steam out of Asian markets. October rally, which was the region's best month in 6 years. On Monday, early this morning, a private gauge of China's manufacturing activity, the Caixin China Manufacturing Purchasing Managers Index, rose to 48.3 in October, marking the 8th straight month of contraction. The reading, which tends to capture more private enterprises than the official reading, was at 47.2 in September. To remind you, a reading above 50 indicates expansion in activity, while one below that level signals contraction. On Sunday, an official gauge of Chinese factory activity contracted unexpectedly In October, China's Manufacturing Purchasing Managers Index remained unchanged at 49.8 in October from a month ago. The third straight month the reading came in below 50. The People's Bank of China said Friday that it will consider a trial program in the Shanghai Free Trade Zone, allowing residents to buy overseas assets directly and opening up yuan-denominated bonds to trading by foreign companies. Other initiatives include permitting Chinese firms to trade derivatives and establishing securities joint ventures with international companies. For the Australian dollar, we had the AIG Performance of MFG Index. This is something which presents business conditions in the Australian manufacturing sector. It came out 50.2 points down from previous 51.7. And we had securities inflation month-on-month 0% down from previous 0.3% and year-on-year 1.8% down from previous 1.9%. Profit growth at Australia's largest banks is slowing after a multi-year run of record earnings as a sluggish economy prompted the lenders to set aside more money for bad debts. Australia's largest four banks are staring at slowing earnings growth as competition intensifies and regulation is tightened. The strong run in Australian bank profits has ended and we'll probably see a slower pace of growth for some time to come. The Reserve Bank of Australia is struggling to spur growth, even with a record low rate of 2%, as it grapples with unwinding mining investment and weakness in key trading partner China. The economy is adjusting to falling national income after a 35% drop in prices for its commodity exports, which is feeding into a stagnant wages, a slumping economy, slumping currency, and low rates, as policymakers try to keep growth afloat. Australia's core inflation slowed to 2.1% in the third quarter, its weakest pace in more than 3 years. Recent micro and macroeconomic conditions increase the chance of a rate cut for tomorrow, which if doesn't happen tomorrow, we will most likely see in December. The interest rate decision and rate statement from Australia will be the most important news for tomorrow from that region. All right, on to the last sector for the day. Commodities. Gold prices dropped slightly in early Asia as investors digested the latest manufacturing data from China. This was this morning. And oil prices fell in Asian trading hours today as analysts expected weaker demand from China in upcoming months. Today's falls came after gains made last week following a further decline in the U.S. oil rig count, which indicated that domestic crude production could drop in coming months. Gold had a range of $11, trading at $11.42 now. Silver had a range of 18 cents at $15.51 now. Crude oil had $1.50 range at $46.34 now. And natural gas is trading at $2.23 at the moment with a range of 16 cents. All right, thank you everybody. This was today's European Session Outlook. My name is Alex and I'll see you next time. Goodbye.